Welcome back to the CB3 Weekly Podcast, where we talk about what's going on in the markets and how it affects your money. Stay with us. What a week, folks. The S&P 500 closed Friday at near its highest level ever, finishing at 6316 after several intraday and closing records throughout the week. That's a 0.59% weekly gain for the S&P, and the Nasdaq did even better, up 1.5%, capping off its fifth straight session of record closes. What's the story? Despite headline volatility, and we know what that's been like all year, especially since April 2nd and the Trump tariff tantrums, the bull market just keeps charging higher and higher. Notably, this past month, the S&P surged nearly 5%, and it's returned an impressive 13% in just the last year. So the trailing one-year return, about 13%. So all this bullishness is happening despite plenty of headline noise. Fresh tariff worries, political discord, uncertainty over the Federal Reserve, and the ongoing battle between President Trump and Chairman Jay Powell. That's not going to end ever. And in fact, I'm still not certain that Trump's not going to try to fire him, but I digress. The message from the market: we hear the noise, but we see the numbers. We like the numbers. We don't like the noise. And those numbers, earnings, jobless claims, and consumer spending, have been rock solid in 2025. So the second headline that I mentioned up front, earnings season kicked into gear, and so far the results have been impressive. Remember that 73% number that I talk about on my CB3 live show, that's what we're aiming for. So of those 73% that are predicting their future earnings results, if that 73 comes in, it's going to be a pretty good quarter. Right now, we're hovering about 80%. Granted, we're not even halfway done with earnings season yet, but that's still pretty impressive. Financial giants like JP Morgan, Wells Fargo, Morgan Stanley, and Goldman Sachs all delivered solid results, fueling gains in the financial sector, which is one of the five crucial aggressive sectors, along with consumer spending, along with technology, and along with communication services. So PepsiCo and United Airlines surprised to the upside. PepsiCo, for instance, popped 7% after the report. I did not see that coming, especially in what's called a consumer staple. On the tech front, Nasdaq's strength speaks for itself. So the semis, meaning the semiconductors, AI, and other software stocks, continued their run, while American Express showed consumer spending is still strong, and that is what I talk about on CB3 Live, folks. We need to see the consumer continuing to spend. The consumer in America is 68% of the economy. Next after that is the private sector. Next after that is government spending. But most of this comes on the back. This GDP that we have in this country, the biggest, greatest in the world, is driven by consumer spending. So the overall Q2 growth numbers, we're tracking towards 9% earnings growth for the S&P 500 so far. That is real fundamental progress. And the third headline from up front, techs lead and the Dow retreats. Not a big deal. The Dow is not, at this point in the juncture, when you have so many of these huge tech companies driving the S&P 500. In fact, the Magnificent Seven are about a quarter of the entire S&P 500. Remember that when NVIDIA traded at a $4 trillion valuation, it was bigger than all but the three biggest economies in the world. That would be the US, China, and Japan. Isn't that crazy to think about? Just insane. So tech has been the engine, but some of last week's gainers were outside mega cap names, and that's good. We want to see that. It's not that I don't want to see the Mag 7 succeed, but we really need other participants in the tech sector, and then all the sectors need to participate if this secular bull market's going to continue. Meanwhile, yields on the 10-year Treasury edged higher, reflecting cautious optimism about inflation and growth. We also, of course, want to see bonds doing well. In an ideal situation, bonds and the dollar and stocks in the U.S. are all doing well, and we're not that concerned, frankly, about the rest of the world. That's just the way it is. We want to see all the asset classes strong here in America. These numbers, as I'm mentioning to you, come as the economy sent positive signals. Jobless claims fell, retail sales beat expectations, and inflation while still on the radar, isn't rattling investor confidence. That's what I talked about earlier. And it did last year at this time, but it's not doing it now, and that's awesome. Looking forward, of course, the earnings remain front and center. They will until about the end of August. So big tech step up. We'll hear from Alphabet, that's Google, Tesla, Verizon, Domino's, and many more in the coming days. Expectations, I realize, are sky high. But if some, well, I won't say if some, I'm going to say if most of these big tech companies and these big consumer spending companies perform or exceed their expectations, it's going to be a really good summer. And July and August are traditionally the slowest months of the year. So that would be a surprise to the upside, and it would be most welcome. But don't overlook the headwinds. President Trump's call for 15 to 20% tariffs on the European Union is front and center with an August 1st deadline looming. Negotiations and any updates this week will have the potential to inject new volatility into the market narrative, but I don't think it's going to be enough to overcome what we're seeing on the earnings side as the earnings really kick in earnest here and continue till mid-August. So here's my big picture take. The setup for the second half of 2025 is really constructive. Earnings momentum is intact, the U.S. consumer is healthy, and the market's wall of worry appears for Dow to be a springboard rather than a barrier, and that's what we want to see. Guys, that's where we are finishing this week in the middle of the summer. Hope it's been a good one for you. We will be back a week from now telling you more about the earnings. We'll see if there are any updates on the tariffs that we need to be watching. But in general, this summer has been a summer of surprise and a summer of sizzling market returns. Hope you've enjoyed this. Stay with us. We will talk to you next week.